I see it clearly in my daily departed. Sometimes I wish you could have seen me when I started. I know it took me a long time, a long grind going to it. A lot of long nights I put into it.
Okay, so first things first, what happens when you buy a stock? When you buy a stock, you then become partial owner of the company. Yes, you're one out of 2.2 trillion people who own a piece of Apple. And granted, that's fine because the company's profits then also become your profits to a very small minuscule scale, but in any event, it's money nonetheless. So let's talk about what happens when you buy a stock, because ideally you buying a stock is your first entry into getting the ins and outs of that company. You become invited to shareholders meetings where you can read what's going on in the company. You hear about what they're doing in terms of, I guess you can say, developing stories. You may not hear everything, but you becoming a partial owner is where you first begin your essential investing journey. Now, just because you're an initial investor doesn't mean you have to pick up and buy any and every stock that you see. The most common place I always say to start off with is index funds. Index funds incorporate big sections of the market in very small tidbits because it's cheaper than buying all 5,000 stocks that are traded publicly that are over $100 each. It's easy and it's the best way to get into the market and start building your portfolio for the future. Now the market is split up into sectors, so you have consumerism, you have healthcare, you have technology, you have a lot of different things that you can come into on any given day. Like for example, you have the finance sector, which of course deals with credit. It deals with banks, so you'll see JP Morgan Chase, you'll see American Express, you'll see like a wide variety of companies there that'll be in the banking industry, and those are generally one of the best places that you can go to earn dividends. So a dividend is a piece of the company's profit. Ideally, a company will pay you for owning their shares for a certain amount of time. It's generally either three to 6 months. So what happens is, because the company is either profitable, they'll pay you small portions of whatever they made. So Apple, for example, every one share of Apple you own, you get 30 cents in a dividend. So now, while that may seem like a lot, you got to think about the big people who own 85,000 shares. If you just do quick math, they're earning over, I want to say $200, maybe $300 off of just owning shares of Apple, on top of Apple's already existing profits. So dividends are a real easy way to get rewarded for what already owning the stock. They're kind of the best way to always have income coming in every 3 to 4 months, and there are various stocks that pay dividends. Now, they can range. While Apple may only pay 30 cents, there are stocks that pay you a lot more for earning the dividends. But again, you just got to research it to know who's paying you what and when they're paying you. So another thing I want to get into today is IPOs. IPOs are called initial public offerings. What those are is that the first time a stock is publicly traded on the market. So let's look at example of what's something controversial. If you guys ever seen Wolf of Wall Street and you saw the Steve Madden scene.
An IPO is an initial public offering. It's the first time a stock is offered for sale to the general population. Now, as the firm taking the company public, we set the initial sales price, then sold those shares right back to our friends.
Steve Madden, that was the first time that stock went public. And because the stock was going public, it launched for an initial price and was traded heavily on that one given day. So generally, when a company is offering themselves on the market, they're looking for investors to buy in and drive the price up. The IPO is kind of like one of the better times to ever get into a company because you're literally getting it from the ground up. Granted, the company is profitable and not falling down, or you're seeing a lot of red in some people's cases. You're generally making a lot of money because a lot of investors are coming in on that day. So Airbnb recently launched their IPO, DoorDash recently launched their IPO, and there are a bunch of companies that are launching IPOs any given time. So always look out for that. You can find it in Wall Street journals as to who's launching IPOs, or you can just look up simple IPOs that are coming out this month and later on in the year. So for most people who are starting on the market and they don't know how much to start with, I don't always say go and aim for a stock. I always say your best bet should be to buy an ETF, because ETFs are, again, similar to the S&P 500, electronically traded funds. Those are kind of like the best way for young people or people who are just starting to invest to start building their portfolio, because it manages such a wide variety of funds. So ETFs are assigned to certain sectors. There's ETFs for stock. There's new era ETFs, which are monitoring new stocks that are up and coming. There's a whole bunch of them, and I do say that they're kind of like one of the best places to start when you're just learning how to invest. They aren't flashy. They aren't going to make you the most money on any given day, but they do diversify you in case of any incidences that happen versus you picking an individual stock. So get familiar with them. I would say look them up and then know what sector you want to start investing in, because every sector respectively has its own ETF and a variety of them as well. Okay, so to close, I want to talk about portfolio management. Now, I've been a victim of this myself, but I trade on Robinhood. Robinhood is either showing you green or red. there have been days where I've seen so much red, I've been tempted to sell everything, and then there's been days where I've actually sold everything. Now, that's not smart at all. You're gonna see red on any given day, but you gotta keep in mind to stay the course. You gotta build your portfolio, you gotta have long-term holds and short-term holds. You gotta think about, when it comes to you building your portfolio, how you wanna have it structured. So think of the companies you know you're gonna hold for a while. Think of the companies you know you're just holding to see a decent profit. But don't be prone to short-term selling. The more often you sell, it's gonna create a panic button inside of you, and you're not gonna wanna keep your portfolio at all. The moment you see any red, you're gonna wanna sell it and get rid of it. When in reality, that's building a very poor portfolio. You gotta have things that are gonna stay the course. You gotta make sure you have a portfolio in which, even though you're seeing red, you always have a decent profit coming towards you. And you gotta know the companies you're picking to invest in, because ultimately those companies determine whether you make money or not. Not everybody's gonna be the next Apple or Tesla where they shoot up and make tremendous amounts of money for everybody. No. If you wanna get into the market and you wanna learn, I'd say always start with ETFs. I say look about the company that you're going to be researching. It's easy to get caught up in knowing that, hey, this company looks good because it made a profit today, when it can just as badly make a loss tomorrow. So research it. Don't ever just jump into a company because you see it looks good, unless you're GameStop and you've been GameStop this past month. Only exception. So in closing, seriously, learn how to manage your portfolio. Look up wealth management if you have to. I recommend Investing 101. It's kind of one of the best books I bought that I've really taken the time out to read, and it's taught me that it's okay to lose money on any given day, but just know that if you're building a portfolio for generational wealth, or just wealth period, there are going to be days where you see red, but there are going to be a lot more days where you see green. Don't be prone to short-term selling. It's not good for anybody. But as usual, thanks for watching. I appreciate you guys. Make sure to like, share, and subscribe. Thank you.
I see it clearly in my daily departed. Sometimes I wish you could have seen me when I started. I know it took me a long time, a long grind going to it. A lot of long nights I put into it.